And while stocks are moving lower, investors are seeking some safety in gold. Prices edging higher. Jared Blikre is on the floor of the New York Stock Exchange with more. Jared.
Hey Josh, we have had a really impressive run-up in gold over the last couple weeks. Let's go to the Wi-Fi Interactive. I'm actually showing gold versus bonds because something really interesting has happened. They have diverged very recently. Now, these two asset classes don't track each other tick for tick, but they do generally go in the same direction, and you want to pay attention when they diverge. So you can see on the interactive how we're tracing out the very similar paths until recently. Bonds sold off a lot more, and this is inverse to yields, by the way. And only within the past few days, we have had a divergence, and that is with gold trading up and with bonds also continuing to trade down. Now, I want to take a longer term look at gold and just kind of paint some different scenarios. When gold rises, it can be from different effects. We say that gold is an inflation hedge. It's also an Armageddon hedge. But usually when gold doesn't track what's happening in the bond market, we have to look and see what could possibly be going on, because we've had a number of good rallies in gold over the last few years. Those were confirmed by the bond market, but you'd have to go back to, say, 2006 to 2009 to find an episode where they were diverging like this again. And we are seeing that. I was talking with Macro Alf, that's Alfonso Peccatiello of the Macro Compass, about this, and he's saying that the run-up that we're seeing is very similar to what happened in 2007, actually 2006 to 2007. That's when the Federal Reserve went on pause. Interesting to say that we did get a rally in stocks, we did get a rally in gold, but of course the deflationary forces in 2008 took over. First we had Bear Stearns. Actually before that we had SocGen. Jerome Carville blew up a hedge fund at SocGen. Then we had Bear Stearns, and then we had Lehman Brothers. All of those deflationary forces were then countered by QE and massive expansion of the Fed balance sheet, and that's when we got this big rise up here. So what's happening with gold right now? Difficult to say. One interesting theory is that central banks are dumping their dollar holdings to buy gold. That could be China, it could be Russia. Russia's already done quite a bit of that in the past, and to be fair, China has too. But there's evidence in the swap market that that is one of the things that could possibly be happening.
So from gold to another important commodity today, Jared, oil prices, which had been strengthening lately, but pulling back a little bit today.
Yes, black gold. So let's talk about that as well. In general, commodities are mean reverting, meaning that they tend to have much more cyclical, they're much more cyclical with their highs and lows to nominal prices relative than just relative changes here. So going back to the Wi-Fi Interactive, we can see over the last 3 months, we had this high here that was on the Gaza incursion, then we sold off a bit, and now we're just trying to find a footing. But I want to show you what happened last year. This was the Russian invasion of Ukraine. That was that peak right there. We are nowhere near those highs. So if we're talking about geopolitical unrest, we've yet to see that really affect the market in a big way. And when it just comes to other fundamentals, I was just talking about gold and how there are similarities to the global financial crisis. I want to also measure WTI crude futures as they move throughout the financial crisis. Now, crude topped in 2008 at $150 per barrel. That was when not only was the Fed pausing, but also cutting rates. This is to say that there's often a late cycle rally in crude oil, and guess what? We haven't even had that yet. So Jamie Dimon was looking for $150 oil when he was speaking to the media a couple weeks ago before earnings. I think that's definitely in the cards, or something higher. Just don't know what that catalyst is going to be just yet.
We will be watching. Jared, thank you.